Now, while the Singapore model is more well known, Indonesia is not a country we hear a lot about. Even though it counts with a huge labor force of above 112 million people, many natural resources, a key geographic position in Asia. It's a member of the G20 and the largest economy of Southeastern Asia. It's expected to grow 6.7% this year, having already grown 6.1% last year. Why is it that we don't hear that much of Indonesia?
Well, Indonesia is important, and it is performing well, starting from a very low base. Of course, Indonesia, as you pointed out, is a large country with a large population, but it was a very poor country. And furthermore, it's a diverse country. Indonesia consists of a bunch of different islands, very different populations, a variety of ethnic groups, and so on. So it's almost a mistake to think of it as one economy. It's really like a bunch of different economies, and the performance in different parts of Indonesia varies enormously. So it's not like it's one coherent unit. And secondly, as I said, it started from a very low base. Also, it has had ups and downs. Singapore has had periods of pretty high growth, but it's also had difficult periods. So I think that a lot of people are still not convinced, Indonesia, I said Singapore. I think a lot of people are not completely convinced that Indonesia is a really sound investment for the long run. But if it continues for at least a few more years to have strong economic performance, and if that performance can spread throughout the economy instead of being focused in just a few areas, then I think people will begin to take it more seriously. But it's still not a big player, obviously, in a sense that China is, but even in the sense that Hong Kong is, or Singapore. They're much smaller, of course, in terms of population, but they're much more integrated into the world economy, and they have a much higher standard of living. I think Indonesia is a little, we have to wait to see if Indonesia can follow that pattern.
Another emerging market, which is a big player in the region, is India. It has a vast potential inside, but also it has an enormous amount of population living far beneath the poverty line. Do you think that microfinances and development banks could be an effective way of solving this situation in India?
Well, I think microfinance is a useful tool, but it's certainly not the answer. So microfinance, of course, refers to these small lending operations which can lend an individual, and often a woman. They've been very good at promoting the economic role of women. Can lend to someone enough money to buy a sewing machine, and then that person can become successful and maybe end up employing 100 people or something. We've actually seen lots of examples like that in India and elsewhere. So the microfinance model is certainly a useful tool, but it's by no means the answer to India's emerging problems. Now, India is doing very well economically, rapid economic growth, so its economic performance has improved enormously, but it still has a ways to go, and as we're saying, there are emerging problems. One issue with India is that the population is still growing fairly rapidly, although fertility rates have declined quite a lot. My own view is that in much of the world, including in Asia, population pressures are a potential problem. The countries that have done really well have also typically gone through decline in fertility at the same time, which has helped. That includes China, Japan, Hong Kong, Taiwan, Singapore, and so on. India actually is going through a similar transition, which is helping its economic performance, but they still are going to be facing the potential for substantial problems related to poverty down the road if fertility doesn't decline more quickly, and if they're unable to deal with some of the other emergent economic problems, shortage of water, rising food prices, and so on. Those are affecting a lot of people in India. I'm still quite optimistic about India. I think it will do well. As I say, microfinance is a useful tool, but it's only one tool. It's certainly not the answer by itself.
There's a growing fear that there's a bubble developing in Asia, and that it could lead to a repeat of the devastating 1997 Asian financial crisis. Would you say that this is true? Do you think that there is a bubble developing, growing in Asia, or not now?
I don't think it's as bad as it was previously, but it's certainly a risk. Of course, we have to be clear what we mean by a bubble. Typically, we're focusing on asset prices high, but I think it is important to have good economic policy from here on out to keep those risks under control. China is the most important case, and the Chinese government is trying to do things to keep the bubble from bursting, or keep it from growing too fast that leads to a burst of the bubble. So I'm reasonably optimistic that we'll have cautious enough economic policy, especially in China, which is the most important country, to prevent a major financial crisis. But there's certainly some risk of that. So I'm not saying it's not going to happen. But I think that it's fairly likely that things will be okay. But I wouldn't rule out a bubble and a crash and a financial panic. It's possible.
This region, Asia, has both the freest economies in the world and some of the most intervening. Is there a formula, so to say, for economic growth in Asia, or is economic development inevitable in the region because of the global context that we're facing today? I mean, if there was a completely liberal government or a completely controlling government, would both see the same financial booms, or does each part of Asia need different types of models?
Okay, well, government policy certainly matters. It's possible to have disastrous government policies, and it's possible to have very good government policies. I think that most responsible economists, and I hope I'm a responsible economist, would not go to either extreme, would not say that a government has no role in the economy. We see that when that happens, we basically have a lot of problems. On the other hand, it's easy for governments to try to do too much or to try to do the wrong things. So to me, the issue is not so much should we have government involved or not. The issue is what are the things that government should do and what are the things that government should not do. In India, one of the big spurs to economic growth really was government policy. And there was a big change in the 1990s when the government of the day said, look, there's just too much government intervention. It's just causing too much trouble. We've basically got to let prices be freed up. We've got to let imports come in, and we've got to let people export things. We've got to let investment dollars flow relatively freely. That had an enormously positive effect on India. So, it certainly is possible for governments to do too much, and that's one of the biggest causes, in my opinion, of slow economic growth and poor economic performance. So getting governments out of the things that governments should not be doing is very important. On the other hand, there are things that governments do need to do. Governments need to establish property rights. They need to have a legal system. They need to have an honest system of taxation and reporting of income. Governments need to build things like roads. They need to provide a school system. They need to provide a stable currency. They need to take actions that don't lead to inflationary pressures. There are just lots of things that governments do need to do well, and as I said, lots of things that they shouldn't be doing. Getting it exactly right is hard. I don't think that the differences across countries are all that great. It wouldn't lead me to say that we need a different formula for every country. Now, earlier we talked about Singapore, and I said that Singapore is so small that it is possible for a government to basically treat the economy like a big corporation, like Singapore Inc. And I said that's not possible for big economies. So I stand by that comment. But in general, I think that in all countries, you want a government that maintains a stable currency, that provides property rights and the rule of law, that has a system of low but honestly paid taxes, that keeps government debts under control, that encourages relatively free international trade and investment, and that provides the infrastructure that's needed for an economy to do well, the roads, communication facilities, and so on. And then, of course, we also have to be worried about environmental concerns. We need a government that pays attention to the environment as well, especially for the longer run. So, as I said, I think that's true in all countries, and some countries in Asia have done a better job than others.
Thank you very much, Mr. Brander. It's been a real pleasure and honor for us here. I'm Andy Binker-Cosen from 21 Stocks.